We are taking up our very first class on regulation. And I would like to keep everything on silent mode. So as far as regulation is concerned, in the paper you will have 76 MCQs and 8 task-based simulation. Right. So in the first lot 38 MCQ, second lot 38 MCQs, 2 task-based simulation, then 3 each. Right. So as far as the regulation paper is concerned, we have ethics, professional responsibilities, and federal tax procedure covering up 10 to 20%, business law 10 to 20%. Third one, federal taxation of property transaction 12 to 22%, and federal taxation of individuals 15 to 25%. And lastly, for entities, business corporations, partnership firms will come for 28 to 38%. See, of that, firstly, we are going to take up item number 4, federal taxation of individuals. Right. So I just don't want to take up too much of a time on introduction. As far as law is concerned, we do have these many items. This will be handled by Meenakshi ma'am, and the rest of which I will be taking up. Now let us just begin the discussion regarding the federal taxation of individuals. So let me just begin the discussion in this fashion. Regulation, under that, taxation of individuals. So let me start this in this fashion. Though it is the last day of 22, but what we will be discussing will be the latest for your ensuing examination on regulation. First and foremost thing is that, see here in India, we call this as central state having the authority to tax. Central government is having the authority to impose income tax. Likewise, GST, etc. Whereas the state government can do their own taxation, such as property tax. Then they have the taxation on entertainment tax. Tax, that is excise on, tax on liquor, and stamp duty. A variety of sources state government exclusively is having. Say on to this income tax and GST, they have their own share for central government. Though collection is made by central government will take their share, and state government to them, they will be providing their share. So the mechanism of collecting the tax is fixed with the central government. In tax, surcharge, cess, etc. So what is the basic difference between tax, surcharge, and cess? It is a Indian scenario question I'm I am asking. Tax is to be shared with the state. Surcharge not available for sharing. Cess not available for sharing. So therefore, whenever central government is increasing the surcharge or the cess, the state governments are not at all liking. Why? Because they don't get the share of that particular collection. Correct? Then why there is a difference between surcharge and cess when they bear the same characteristic feature, that being not available for sharing? As far as tax and surcharge are concerned, money can be collected, can be used for any purpose. Correct? I collect income tax, I use it for defense, I use it for education, I use it for infrastructure. Nobody can ask me a question. You got it from business, but you are doing it for other than the source from which the money got collected. Nobody can ask such question. Whereas the cess, Switch Bharat cess would mean that money collected can be used only for Swachh Bharat schemes only. Education cess would mean that money collected will be used only for education purposes. So we have difference between surcharge and cess. Cess not available for sharing but can be used only for that purpose. Surcharge and tax, one is shared with the state, the other one not shared with the state, but both have the common feature that it can be used for any purpose. Like how we have central in India, they call that as federal in America. See, whenever they use a term federal, you should understand that it is central. F-E-D, federal. In our case, central. So, even in the GST also, you have CGST, SGST, IGST. Clearly, you identify individually which portion goes to central government, which portion going to the state government, and which portion for intrastate sales that goes to central government. Here you have that sort of classification in India. So one big difference that you have is that in the collection of taxes in America, they identify this much is for federal and this much is for state, where it is not a separate identification that you have in income tax, but we do have it in GST. Are you understanding what I'm telling?
Yes, sir. Yeah.
Now let us just start this discussion. Taxation laws under CP regulation, part 1. Why I have taken up part 1 is that our textbook is arranged in such a fashion that you cannot go in that particular order. First and foremost thing in our income tax material of CA Institute, they will give it in the correct order. Basic status, what is the tax structure? So everything will be elaborated in the very first place itself. Whereas our study material has got a different objective. How the syllabus is drafted, same is the way they are given. So in individual taxation, where you have something as federal taxation, state taxation, where under that state you have local, under that you have city and counties. We don't have that sort of concept of city and counties in India. So city is a little bigger when compared to counties. Counties are to be referred to as suburban. So urban cities, suburban portion are counties. So where taxes can be collected at various stages for various activities. So here our focus is only on federal taxation, and just for the sake of basic introduction, I've conveyed that we have state taxation, under local you have city and county, right? So other taxes other than that we have social security tax, Medicare tax, gift tax and estate tax. So these are all taxes when you broadly talk about, but here our focus is only on to federal taxation on individuals as of now. Now let us just proceed. Are you clear about this?
Sir, yes, sir. Yeah, yeah. So, sir, so with respect to federal taxes like income tax.
Yeah, it is only
So,
income tax.
okay, okay. State tax will have VAT.
Income tax also, like how you have GST, IGST and CGST and all that.
Okay.
Collection of tax itself where they identify individually.
Oh, okay. Okay, fine, sir.
So just at the introduction stage, variety of taxation I've just made as a reference. Now, in India, we have five heads of income. Income from salaries, income from house property, profits and gains from business or profession, capital gains and income from other sources. Why I am just referring to all in Indian scenario is that, say, we always carry the legacy system. Our mind is always corrupted with our existing system. So therefore, I have to tell that these things are not there. See, otherwise, people will be asking, sir, when is that I will be you will be discussing about salary? When is that you will be discussing about income from house property? So let me make that point very clear. It is not relevant in the case of US taxation. That means we are not going to take it up in this five heads. So first and foremost thing, I'm just making the point very clear that our way of doing things will be entirely different. In US taxation, we are going to have gross income. We are going to have gross income from whichever source through which we generate that income. So let it be salary or let it be house property, that is property transaction, could be capital gains or from business or from other sources, where it is legal or illegal, where it is one time or regularly happening, we are not really worried. That means all items of income from whichever source, whether the income is earned in USA or outside USA, is no matter. If it were to be an income, it will be captured as gross income. There is no account head or there is no head of income that we have as we do have it in India. Correct? Then people would be asking the question as whether it is gross or net. Let me tell you, it is only gross. So whatever expenses or whatever deduction I can claim, that we will take it up as an adjustment. After that adjustment from the gross, whatever we get is adjusted gross income, AGI, adjusted gross income. This is going to be very, very popular. So wherever we will be referring to as adjusted gross income, we will be putting it out as AGI. Again, income computation. How it looks like, it is like in this fashion only. Gross income less adjustment for expenses. Adjustment would mean expenses only or eligible deductions. So the net of that is adjusted gross income, AGI, adjusted gross income. Then less standard deduction or itemized deduction. What is this standard deduction or itemized deduction? So in India, we don't have the choice available to the assessee. Here you call them as taxpayer. What is that? In USA, we call them as what? Taxpayer and not as assessee. The choice is given to the taxpayer to choose between standard deduction or itemized deduction. What do you mean by standard deduction and what do you mean by itemized deduction? So it is a separate topic that we have got to handle. Let me just check up. So let me just convey it like in this fashion. If you have some knowledge in Indian income tax, then you will be in a position to understand. If you prepare income from house property in India, so from the rental income, we are expected to deduct towards municipal taxes and you arrive at net annual income. And thereafter, you have one as standard deduction 30% of the NAV.
Name. Yeah.
Correct? Then you have something to do with interest on housing loan, which is based on actuals with a cap. So in India, for income from house property, there is one standard deduction, the other one is actuals. Here it is not like that. For the same item head, either you can try standard deduction or itemized deduction, and it is left to the choice of the taxpayer. Either they can choose standard deduction, which is considered as standard from the very name itself, you can understand. Whereas itemized deduction is based on some conditions where it is not standard, where it will vary depending upon the circumstances that we are going to project. So the taxpayer has got the choice of selecting between standard deduction or itemized deduction. In year number one, he can take it up as standard deduction. In the following year, he can take it up itemized deduction. Once again, follow in the third year standard deduction, followed with itemized deduction. As he likes, he can do that. Here, we call this not as previous year, we call that as tax year. The year in which income is generated, we call it out as tax year. TAX, tax year. Correct? Let me repeat. That new term, two new things that I'm just communicating. Assessee will be referred to as taxpayer. Previous year will be referred to as tax year. So what is a tax year? Tax year starts from 1st of January, ending up by 31st of December. So it is ideally calendar year. Is that calendar year is the only tax year that they can do that? Generally, it is like that. But if the assessee were to have businesses outside USA, when they follow a different year, that is also acceptable. That is also acceptable. So we will go into those aspects and issues a little later. Right now, we can say that standard deduction or itemized deduction that can be taken up at the choice of the taxpayer. And when that is given to you as at your choice, that is either flat amount or flexible and depends on various conditions, whichever is higher. As far as the taxpayer is concerned, whichever is higher is beneficial to him. What is that? Whichever is higher is beneficial to him and the choice is left to the taxpayer. He can as well choose as he likes and nobody will question. He cannot be claiming both, but he will have the choice of selecting out of the both. Then after deducting that standard deviation or itemized deduction, what you get is taxable income before qualified business deduction, QBI. This is like a deduction which they put it out as popularly known as under section 199A. They, unlike our Indian scenario, where you can visit their IRS, our income tax department. There will be referred as Internal Revenue Service, IRS. In their official website, what they do is that a particular concept is there. So for example, if it were to be standard deduction, you can put search for standard deduction and ask a query, what is standard deduction? Give an example or examples of standard deduction. So you just find a lot of literature coming up there with examples that they provide. So a lot of assistance you find it in IRS website itself. You don't have to just search for a textbook to know about a particular matter. You can know from IRS side itself. So it is so elaborate where they provide a lot of examples. Such examples will enlighten you and make the subject very light and easy. And I have heard in Delhi, a student got 99 in regulation paper. 99 in regulation paper. So therefore, what matter I wanted to convey is that first and foremost thing, some people carry a wrong message that regulation is going to be the toughest of all the four. Actually, it is not so. I will share you the screen shot where a person was awarded with 99 and is presented with some award by that particular coaching class, Delhi based. So
Oh,
the point
Simandar.
is,
Simandar.
no,
Simandar.
no. I will tell you later.
Ah, yes,
It is
sir.
on.
Sorry.
It is on recording, no.
Yeah, okay. Sir.
So therefore, 99 is people you see. One moment. I'm just trying to find out as whether we have it there. Sent. You can just check up.
Okay, sir. Thank you. Yeah, yeah.
See, it is not something like somebody is telling and all that. I'm telling you from my little knowledge on the subject. I really feel that this is close to your heart, I would say. Very nicely drafted. They are foreseeing as how an individual will suffer. In individual category itself, you have a lot of classification. We are going to see that. So the point is standardized deduction, standard deduction or itemized deduction, whichever is higher. And this qualified business deduction QBI is deducted, that being 199A getting deducted, and finally you get taxable income. In India, we call that as total income. After getting that gross total income from which we will be deducting the general deduction under chapter 6A. Here we have that. How you find a tax computation? See, as I told you that our focus is only on to federal taxation, and we will not be taking into consideration state taxation, city taxation, county taxation, and on the other side, we will not be taking into consideration the other features, gift, estate, and all that we will not be taking up at all. Purely, it is federal taxation alone we will be taking up. So from the federal taxation, you have tax credits. See, one more important thing is that here in regulation paper on taxation, you don't have to remember the limits and all that. Though tax computation and all that, they may be asking the form in which you got to file, they will be asking. So here they give more importance to in which form you got to submit. What is the time period within which you got to do? That sort of thing is what they will be stressing. They will not be doing a testing on your computational aspects. Remembering the section and all that, they just don't test. But remembering the form is very important. Now, let us just take up federal taxation on which you have this tax credit. So these tax credits are somewhat similar to that of your rebates. Rebate you have, the person should be not getting an income greater than 5 lakhs. Actual tax liability or 12,500 or 10,000, whichever is lower,
Yes, sir.
they tell as 87A and all that. Likewise, you have tax credit. For tax credit, it's 30, 40 tax credits you have. And for each one of those, you have the eligibility and all that, and you have a cap that has got to be deducted. Then the other taxes, whatever that is applicable, that you got to add, that becomes a total taxation. And against that, whatever tax that were paid directly by the taxpayer or through withholding tax, there they do not call that as tax deducted at source, which instead they call it as withheld tax or withhold tax. So when you deduct that, the balancing figure is going to be the how much the taxpayer has got to pay or he has to seek refund from the IRS. Now, like in India, we have slab system of account, that is taxation. We have progressive rates of taxation. We do have. So on ordinary income, it ranges from 0% to 37%. Whereas in the case of preferential tax base, where it could be your long-term capital gain, dividend, etc., the percentage being 0 to 20, 10 to 37. 0 actually a rate you have, but the minimum rate of taxation is 10. So when you have 0, people might misunderstand 0 cannot be a rate. So therefore it is 10 to 37%, that being normal rate of taxation. Whereas for long term, it is in the range of 0 to 20% preferential rate. So now let us just go into the filing status. In India, we have 7 filing entities we have. Individual, HUF, firm, LLP, corporate company. Then you have local authorities. Then you have AOP, BOI. And lastly, you have artificial juridical person. Here we do not have that many. And since our focus is only on individuals, in individual itself you have 5 categories. What are those? So picture will tell the story. What is that? Single. Who is a single? Single status for which there is no condition associated with that. It is a residuary category. Normally, residuary category will come at the last. Whereas single is normally people will understand that he is not married. Here, a person could be a married person, but still he may be single. We will discuss about that a little later. See, the point which I want to tell you is single should not be misunderstood that he is not married or he is unmarried and all that. Please just do not have that sort of inhibitions. So single is basically in American taxation system, that is US taxation system. It is a residuary category. Correct? There they do not talk about he, she, or transgender and all that. And when they communicate anything about marriage, in India, we talk about marriage between male and female. Where in USA, in many states, they recognize same gender marriage also. So there are a lot of jerks you would be getting once you get into the textbooks of USA, because our practices in India, and practices in USA are entirely different on various aspects, especially on personal life. So I would like to discuss a few points, even if it is not there in the slide, let me just discuss. They talk something about marriage, divorce, remarriage, and you have stepson, stepdaughter, stepbrother, stepsister, half brother, half sister, adopted child, foster child, FSTER, foster child. You have a variety of new relations that you find in US taxation. At this moment, let me just find out from you as what do you understand from stepchild? What do you understand from stepbrother? Then stepsister, half brother, half sister, adopted child, foster child, foster parents. So likewise, you have variety of such things. Marriage, divorce. In India, people call diverse. They will put it like that, diverse. Charles. The name is not Charles. He is Charles. So people might ask this question, sir, did you visit USA and all that? So let me tell you, no. One of our friends, that is one of our students by name Charles, came from Virudhunagar. He introduced himself as Charles. Only then I have understood, oh, Charles should always be pronounced in this fashion. Divorce, marriage, remarriage, separated, decreed, decreed. So all that names we do have, let us understand what is a stepchild. Though it is of a general common sense, but many a times people will have something in their mind and they may not ask what is this stepchild. No, I will put it like this way. A married, B A husband, B wife, but she was a divorcee. She was a divorcee having a child. Child name is C. C is the stepchild of A. So I will, this is C. C is the stepchild of A. A is the stepfather of C. Correct? Step parents. Are you clear?
Yes, sir.
So we have completed stepchild and step parents. Because once I know stepfather, you can change the position for stepmother. Next. Step brother. Can you tell through an example what is a step brother concept? A,
Sir, if A
yeah,
has a if A has a child and B divorcee is has also a child, so for A's child, C would be a stepbrother.
correct, correct. A has X and Y as children from a marriage. Children from a marriage. And is a divorcee. He married B, another divorcee, W and Z, children. So he is a son, he is a daughter. He is a daughter, is a son. Now you can easily understand who is a stepbrother.
Yes, sir.
X and Z are stepbrothers. They do not have, they do not have common parents. Correct? As far as W and Z are concerned, for him, B is mom, but A is not dad. So for W and Z, some other person being the dad, they are conjoined into another family because mother B married dad A and X and Z are stepbrothers. Correct?
Yes, sir. Yeah.
Then I can put this in this fashion X and Y and W and Z. For X and W, for X, W is stepsister. Correct? It is step brother. Y to W, stepsister. Y to Z, stepbrother. Correct?
Yes, sir. Yeah.
Understood? No. That's it. It is not income tax, but it is a general common sense only. What do you mean by half brother? Half brother. We have A got X and Y as his children. A married and is a divorcee. Divorcee. Married B, and because of that marriage only, B has got W and Z, son and daughter, daughter and son. Now, what is the difference between stepbrother and half brother? So, in the case of half brother and sister, there is a common parent between them. There is a common parent between them. Common common parent is A. For X and Y, W and Z, it is a half sister. So X is going to be our CM, Stalin. Correct?
Yes, sir.
W being Kanimozhi. For CM Stalin, Kanimozhi is not biological sister but half sister. For Lord Rama, Lakshmana is half brother. For Lord Rama, Shatrughna is half brother. For Lord Rama, Bharata is half brother. So that half comes only out of the common parent. Who is the common parent between Rama and Lakshmana? Dasharatha. Who is the common parent with Bharata? Dasharatha. Who is the common parent for Shatrughna? Dasharatha. Now you can understand what is the basic difference between step brother and half brother. Correct? Are you clear?
Yes, sir.
Then adopted child. Who is an adopted child? Say adopted child against which adopted parents will have right of parenting. Correct? Adopted parents will have right of parenting. See, where the formalities of adoption were all carried out officially. Correct? As per law, they have done. Now, foster child. What is that? It is the same as that of adopted child. Adoption not done officially. So adoption not done officially, therefore they do not have the right of parenting, but they are doing. It is a stage before getting that right from the court of law. That is what you call it as foster child. Similarly, foster parents also.
Foster parent. Okay, sir.
Adoption not completed officially. Next one is marriage should be officially solemnized. Should be officially solemnized. Living together. Living together as girlfriend and boyfriend is not a marriage at all. Though they may be expressing much better love than a married couple, here what is very important in the case of marriage, it is only the form is very important, not the content. You would find married people, they will be living in the same place, but no love between them. That and all, they will not worry. Married, married. You are loving for 10 years and 15 years, yielded so many children, but yet when marriage is not solemnized, you cannot call them under a marriage contract. You are not married. So here it is not marriage, it is married. Marriage should be officially solemnized. Living together as girlfriend and boyfriend is not a marriage at all. They do not carry as married individuals. So this particular status of being married is a very important one, because in married individual you have the choice of either filing separately or jointly. You have, for that the first condition is that marriage should be officially carried out. Divorce. What is a divorce? Break in wedlock. Break in wedlock officially decreed. Break in wedlock officially decreed. Not the temporary decrease. Correct? Remarriage. Remarriage, from the very name itself, you understand that marriage officially solemnized, after a divorce or death. Correct? Remarriage is officially solemnized after a divorce or a death of other spouse. Correct? Separated. Separated, divorce, or considered unmarried. There are certain conditions and all that. We will discuss that a little later. A divorcee or considered unmarried. Decreed. What do you mean by decreed? Direction of the court to execute the order. Direction of the court to execute the order. Please do it. That is what you call it as a decree. Correct? So we have now some amount of input in us to know about what is a marriage, what is a remarriage, what is a divorce, What is that separation? What is a foster child, foster parents, half brother, half sister, step brother, step sister, and all these relationships are recognized, or in some places recognized in a very limited way, so that that point of time we should not be having any jerk. You should not be asking, sir, I do not know much about this half brother concept, which you don't have it in India. It is not like that. In India also we have, but we do not give that amount of importance for filing status. Now, let us just take up single is basically a residuary category. Second category is married filing separately. We call this as MFS. Married filing separately. What do you mean by that? So first and foremost thing in the case of this status is that the person should have married and the spouse should be alive. And both of them electing to file the return separately. They have the choice in 1 year to be taking it up as separately. Another year, they can reverse that decision and they can go for filing jointly. MFJ. Then you have that as qualified widow or qualified widower. So this is to be considered as one. Qualified widow or qualified widower, as the case may be. So a person who had lost her husband or lost his wife, and when he has got no children with him, he will not come under qualified widow or widower. So this particular person may be a qualified dependent. It is not necessary that the person should be a child. That is, need not necessarily be biological child. We will discuss that a little later in greater detail. So the point which I want to tell you is that widow or widower comes not only because of the death of the other spouse, but also on the existence of the other person. If you find that they are simply husband and wife with no issues would mean no children there, no dependent there. None of their parents live with them. Though in India, a person who had lost his wife, we will call him as widower. A lady who lost her husband, we will call her as widow. Here for filing status, it is not like that. There are certain conditions that you got to satisfy. Only then you can have them classified under qualified widow or widower, and you have separate slab system for each type of individuals, and therefore it becomes a basic necessity to classify any taxpayer under any of these 5 heads. The choice is not between, there is choice is not available to the taxpayer. When they satisfy, they got to take up that particular position only. Sometimes, very rarely you find you have the choice of more than one at a particular point of time and where you can select one. We will discuss about that aspect a little later. Now, the fifth category that you just find, it is head of household. What is that? Head of household. So that means a person here could be a married person or it could be an unmarried person. So head of household should not be misunderstood that the person should have already married. No. Head of household should have dependents. We will have certain conditions to satisfy to classify an individual under HOH. So we will have conditions for each one, but there is no condition available for single. That is the reason as why you put it as residuary category. Coming under residuary category. by default, if any of the conditions are not satisfied, under what head or under what status a person shall be taken up for assessment in US would only be on account of, that is, under what head you got to do, you got to satisfy certain conditions. If certain conditions are not satisfied, automatically the person will come under single category. There is no condition associated with a taxpayer taking up under single category. But when he has got the choice of doing, nobody is expected to compel, and the assessee can decide upon what status he wants to assume. Tax rates. For single, the tax rates are in this fashion for the tax year 2022. So as far as the IRS examination is concerned, they are not going to ask you what is the rate at which taxation is to be done. If the income is between 89,076 and 170,050, so they will not ask such question. So here it is not a test on the memory capacity that you carry. It is basically understanding on the subject is given greater amount of importance. Now, I would like you people to take it up as a screenshot there. Now let us just proceed to the next one. Shall I proceed to the next one?
Sir, yes, sir. Done. Yeah.
For filing separately, this is going to be the tax rate. Initially, do you remember that we were referring about 10% to 37%? Yes. Now, tax rates for filing jointly, qualified widow and widower are all taken up with the common table that you have for the tax year 2022. So for head of household, so if you look at other cases, it is 20,550 for two, 10,275 is for filing separately. 10,275 in case of single. So when he has got the choice, he can decide upon under what status his file has got to be processed. Correct? HOH, you have this as the schedule of tax rates. Is that clear? Shall we proceed to the next one?
Sir, just a minute, sir. Can you just go back? I'll just take
Yeah.
just 1 minute. Yeah. Yes, sir. Next one. Next one also I'll take screenshot. Yes, sir. Done. Yeah.
So now the regular tax rates starting from 37% we have just taken up. What is that preferential rates? Now that in India we have this long-term capital gain 112, 112A, 111A. All these sections we are having in capital gains as for long-term and short-term. Here we do have 0, 15 and 20 are the percentages that you have. And depending upon what status the person is expected to be classified, he can choose at his own choice. That is, he can select on his own choice. He can elect to reject. He can elect to select. Everything he has got. But whichever one he is selecting, naturally we expect that particular choice should be beneficial to the employee. Now, you have preferential tax rates in this fashion for long-term capital gain and the dividend. So there is no necessity to remember all this, but if you are having good memory, it is better that you try. Okay. Now, for married filing jointly, What is the basic expectation that they have? The tax year is expected to be same for both husband and wife. First condition is that one cannot be having 1st of April to 31st of March, the other one 1st of January to 31st of December, 31st of December of the same calendar year. That is not permissible at all. Tax year for both husband and wife should be same. Different accounting methods may be followed. So, there is husband may take it upon accrual basis, wife can take it upon cash basis. Vice versa is also possible. Different accounting methods may be used. The tax liability arising out of filing the return on joint basis will be applied on joint and several basis. What do you mean by joint and several basis? If the husband is failing to pay the tax, the money can be recovered from the wife. Or if the tax liability of the wife, for which there is no way that the as far as the tax liability is joint and several would mean, as far as the taxpayer is concerned, normally we expect that the taxpayer is responsible for his income alone, but when they opted to take it up on joint basis, the liability will be resting jointly with them as well as individually. That is what you have as several. So the department can collect the money jointly from the couple, or they can entire amount can be collected from only one of the two. Correct? So this joint and several liability concept, we have seen it in partnership in Indian scenario. Same thing you have. So next one is that substance over form is a very important concept that you have. If divorce is solely for the purpose of reducing the tax liability and remarriage is performed later, then people might just consider that you are abusing the law. The law is for a genuine need, but when you are creating artificially a need, then you cannot consider that as a divorce at all. You should consider them as married without any break. Are you clear? So there were some news reports coming up like Bill Gates divorced his wife only for the purpose of avoiding tax. It is a matter of tax planning is what I've just seen. People have written documents on Bill Gates. He divorced because he never wanted to have a joint return, and therefore people say that legally they were divorced, but that legally is only for tax purposes. Otherwise, you find them moving in all places, and they might come out saying that they are in a corporate. One is chairman, the other one is MD, and all that. They might say. So the point is, if it is done with an intention to reduce the liability, and later on they are getting remarried with the same spouse, please understand that. So taxpayer is considered as married only. So here is a place where let me tell you that the filing status is expected to be looked into as what status he is maintaining on the last day of the accounting year, that is tax year. On 31st of December, what status at which he is there, that is the basis on which he can or he is expected to file his return. 364 days he remained bachelor. On the last day, he is celebrating his marrying a perfect match and all that. What is his status? Definitely, he can choose between married filing separately and married and
Filing joint.
filing jointly. The choice is left to him. The choice is left to him. 364 days they were married. on the last day they got officially divorced. What is their filing status? Filing status will not be married. What status you are maintaining on the last day, last hour, that is the basis on which the filing status will change. For example, A and B are marrying just by closer to midnight, 12:58, and they have exchanged the ring, and you just find a pastor there who is solemnizing the marriage, and they will become what? Married persons. Are you understanding?
Yes, sir. Sir, for the purpose of this reducing the tax liability, you had said no, sir. So, is there any time limit for the remarriage so that the intent can be identified, or whether it's purely on the basis of the taxpayer who's actually giving the
I
information?
will give you a case, classic case.
Yeah.
So you just find by 2019, 31st of December 2019, they got divorced. By 2nd of February 2020, remarried. By 30th of December 2020, divorced. So by this point of time, married filing separately not possible. Married filing jointly also not possible because divorce took place on the last day.
Last day.
But during the year, they got remarried. Once again, at the end, they are divorced. So here is a place they look into what is the purpose of between two people getting divorced and the same couple getting remarried. There should be some valid reason, no? When there is no valid reason for a particular action, we should understand that they have done it only with ulterior motives, only to defeat the provisions of the law. Therefore, any act will be considered, or any act with an intention to defeat the law will be considered as sham transaction, and they will lift the corporate wheel, like they will look into the what is the true face of that particular. That is, they want to look into the true color of that particular action. So therefore, what is very important here is their intention. Is that right? Are you clear? So what on the last hours, last point of time in that particular year, that particular status only will come to them for the tax payment purposes or the tax liability purposes. Are you clear?
Yes, sir.
Last day decree, after which status is single, correct? Last day decree for divorce they have got, after which the status will automatically become single. So what is very important is last day status is very important. If either of the couple has nil or low income, they can file as married filing jointly. So what is the point that we have? Husband is earning 2 lakhs US dollar. Wife is not earning at all. Can we file MFJ? There is no precondition that you have that wife should also be generating income to file that as MFJ. Even if either of the couple has nil or low income, if they opt to file on MFJ basis, nobody can stop in this world from filing MFJ. Correct? There is one more scenario also we have. Let me just tell you now, which may be coming up in the later part of the slide. What is that? You find they are all lovable couples, and 10 days before the year end, wife passed away. Now tell me, what is the status of husband? On the last day, she is not there. She passed away 10 days before. And husband did not marry until the end of that particular year. What is the status as far as the husband is concerned?
Sir, qualified widower. If
No,
they have a
MFJ, there is an exception that we have. So having conveyed all this, let me tell you that an exception that we have for when a person lost his spouse in the tax year, in the tax year, his status will be that of MFJ, provided he did not remarry by that point of time. See, when I make this statement this way, then people will immediately asking the question. What is that? What is that question that they will be asking? Supposing that person is marrying somebody else. Supposing that person is marrying somebody else before the end of the year. So the surviving spouse marrying somebody else, his position will be like married person. He may decide to file the return MFS or MFJ in the new marriage setup. Then people will ask the question, for the deceased spouse, what is her filing status? Her legal heirs can take it up as married and filing single, that is separately. Are you understanding?
okay, sir.
So in an year, the surviving spouse continue to live without any remarriage. MFJ is the only choice that they have. If that spouse is getting remarried with some other person, because of that marriage, he can either choose MFS or MFJ, and for the deceased spouse, the legal heirs are expected to file the return for the deceased partner, deceased spouse, only under one choice, MFS, married and filed separately. This is what you have. Now let us just go through item by item. There is an exception. You are talking about decree. Decree could be interim or decree could be final. Why there should be interim? The court cases may last for a longer period of time, maybe having lot of hearings in the court of law. When the wife is suffering, where she has got no income, and if the divorce judgment were to take longer period of time, we all know in the legal jurisprudence and interpretation, people say that justice delayed is justice denied. Until the final decree is getting over, the other spouse having lower income, deprived of her or his income because of the marriage, has got to be compensated by the other person. The court may say, yes, let the final decree come, please start your compensation to the other person. You pay the compensation in this particular fashion. Until the final decree is made, their filing status will continue to be that of the married couple. Interim would mean where it is not finalized. In the case of final decree is over, it is very clear. Are you clear? So until it is not finalized, the individuals will be considered as married. The individual will be considered as single. Test for marital status. Whatever I have conveyed just few minutes back will continue to be there. What is that? Married opposite gender. In USA, as I told you that marriage between same gender is a possibility. In some of the jurisdictions and provinces, they recognize such marriages. Even in Chennai also, near Besant Nagar, there were some protest. I'm just not really knowing what was that, some MGBT or LJBT, some name they have just coined. That is, people of same gender living together. There is some name that they carry. That nonsense and all that I'm just not remembering. But anyway, that living together you have. The other one is that married but living separately. Correct? They are in the process of departing, where they have got some temporary decree of divorce. Are you clear? Shall we proceed to the next slide?
Yes, sir. So in this case, separated, we'll be filing it as MFJ until we get a final decree.
Correct.
Okay.
Correct. So just because the final decree is not come, they will not be living together. They are in the process of getting separated. Now let us just talk something about surviving spouse. From the very name itself, you can understand surviving spouse should be understood as either qualified widower or qualified widow. Correct? All of you, are you clear?
Yes, sir.
So now let us just understand spouse died, not remarried in the year of death. Please understand the surviving spouse for in the, that is in the year of uh, tax year, that is in the, that is the death that had happened in the tax year, he will not be considered as widower or widow. He or she will be continuing to file as MFJ. That I've already conveyed. But when is that status will come as qualified widow or qualified widower? That is what we are going to see. So, spouse died, not remarried in the year of death, not a qualified widow or widower as on the tax year end. Am I right? This is what I was just referring about. So, this qualified widow and widower will come only in the next 2 following years. What is that next 2 following years? In the year of death, the other surviving spouse is expected to file only as MFJ. And for the next 2 years, they cannot file under MFJ. They have got to file it as qualified widow or widower, provided certain conditions are there. What is that? They should have a child. They should have a dependent. What is that? That is the reason as why qualified widow or widower, alongside of that, there is one child I've just put in the slide. Whereas in Indian scenario, when you find two people married and one person passing away, the other person will be branded as widow or widower, just like that. Whereas for tax purposes, it is not like that. So, married filing jointly for the year of death. This I have already conveyed. Be entitled to file joint return in the year of, in the year the spouse died. Correct? Had a spouse who passed away in the prior 2 years. The condition for qualified widow or widower, or you can call that as surviving spouse, had not remarried before the end of the current year. Dependent child, it could be biological child, adopted child, step child, and not foster child. So that particular thing that you are looking into, no, could be his or her own, or could be adopted, or it could be step. Lived with the child in the taxpayer's home all the years. The taxpayer is expected to live with the, or the child is expected to live with the taxpayer all through the year. Temporary absences will be ignored. What could be a temporary absences? Children may be asked to report for NCC or for some research purposes or for some trekking purposes. One moment. One moment. So, temporary absences where they got to take up the examination away from their home. They may have to stay in a particular place to take up the examination. So, the school might have arranged for one sports program, sports event, and because of that, the child or the children might go out of the house. Correct? So, those temporary absences are to be ignored. You cannot strictly say that 4 days the person was hospitalized. 5 days they have gone in for a vacation. You cannot be childish. Lived with the child in the taxpayer's home all the years. Paid more than 50% of the cost of the upkeep of the home. These are all for what? Surviving spouse and not for MFJ. Paid for more than 50% of the cost of upkeep of the home. What is the upkeep of the home? Utilities, interest on mortgage, any property tax, say those stuffs. Then 2 years from the death, year of death, qualified widow or widower status will be unavailable. That is, qualified widow or widower status will be applicable only for how many years?
2 years.
Only for 2 years from the year of death, provided these conditions are satisfied. If these conditions are not satisfied, then you cannot have what? Surviving spouse status. Then people might ask this question. Surviving spouse remarried during the tax year. Already we have conveyed.
MFJ.
What is that we have conveyed? That person can file MFS or MFJ with a new marriage.
Yes, sir.
Surviving spouse has status of married filing jointly or separately with a new spouse. That is what I was just referring about. Next one is that deceased spouse shall file as married filing separately through legal heirs. Correct. So head of household is definitely a much longer discussion that we will be keeping it and we will be doing it in the next class. Before we could just let us just understand what we have just done in this regulation, taxation, right? So taxation regulations for individuals, and you have individual taxation and Other taxation that you have 5 heads of income in India, whereas you don't have it in
US.
US. And this is the format that we normally take it up for taxable income and tax computation, where you have slab rates of taxation, where normal taxation you have, and concessional taxation that you have, your filing status, we have covered separately, jointly, and a surviving spouse. And the rest we will take it up in the next class. And before that, we have discussed something about overall stepchild, stepbrother, half brother, and what is divorce, what is foster child, all that we have discussed. So in the next class, we will be discussing much more on to this taxation, especially head of household, we will be taking up in greater detail. Okay,
Yes, sir.
thank you.
Yes, sir. Thanks, sir. Thank you.
Okay, all right. Bye.